afterwards. What we're going to talk about today is credit score basics and also 7 simple steps to elevate your credit score and dominate your future. This is something I put together a few years ago. I call it secrets those credit doctors don't want you to know. This book actually came out of me being, I guess, ticked off at people getting ripped off from all these credit doctors out there. A few years ago, there was quite a few people that were putting this out, these companies, a lot of them were multi-level, and some of these people trying to teach you about credit didn't even know about their own credit and had bad credit. The stuff that I learned, it was actually from working with my clients and people with loans when I was a mortgage broker back many years ago. And I learned from the credit bureaus. This is all stuff from trial and error. None of this stuff is based on theory. None of this is based on books, except what I put in my book. This book here, the one you see here, it's Secrets Those Credit Doctors Don't Want You to Know. This is one I updated and I put together a few years ago because I had one before that with a workbook that I wrote the books never to sell them. I just made them to give people information because there was so much misinformation out there from the credit doctors and from some of these sources. And I don't care if they had attorney behind their name or not. There's a lot of them out there. And as far as I was concerned, there wasn't any of them that were worth anything. I used to question them all. So but the other books, the first one I did with the workbook, I had them separately. Well, Larry King did a thing a few years ago on credit secrets, it was called. They were selling a book for like $40. And all of a sudden, I noticed, and I didn't even know he was doing an infomercial, but there was about, we sold tens of thousands of copies of my other book. But one of the problems was the workbook was separate and it didn't have they weren't together. So people bought the workbook and they weren't happy with that. So I updated this, something I wasn't going to do, but I put this together, and that's what all this is based on that we're going to look at today is on actual facts. If you want to know, you want to get deeper than what we're going to talk about with the basics, you can. You can get a copy of this book for around $20 on Amazon, but I'm not trying to sell you a book. This is not a sales webinar or anything like that. This is strictly for your education. So that's what we're doing today. So, little disclaimer, I'm not giving you any advice. I'm not your advisor or anything like that. I'm not a lawyer. I don't even play one on TV or none of that kind of stuff. But I'm going to give you everything I know. This is based on actual facts. If you stay till the end and you want a copy, I will give you a copy of the slides so you can have it for your personal educational library. Okay, let's get into this. Well, what are credit scores? Well, credit scores, they range between 300 and 850, pretty much for mortgages and a lot of things. Some of the industries go up to 900, like auto loans and stuff. They have a little different thing they look at, but most people are going to fall between the 300 and 850 range, depending on what you're, what you're looking for, what you're trying to get credit for. That's how they score these. All right. And most people are familiar with the FICO score. FICO is actually just one of the scores, and that's involved with Experian. There's 3 credit bureaus, that reporting bureaus. FICO is the one that's most common for, and I don't even know why, but that's the one they look at, that most people are familiar with. So Experian is actually the company that has the FICO scores. Then we have an Empirica score, which comes from TransUnion. Now, a lot of these depends on what part of the countries that you live in or what territory. Most of the time, though, you'll get a tri-merge report when you're going for a mortgage. They call it a tri-merge report, and they're going to pull up all 3 bureaus and kind of compare them because not all the information is on all 3 bureaus at the same time. And then the third credit bureau, reporting bureau, is Equifax, and they have a beacon score. And then sometimes I've seen it called a pinnacle score. So either one of those, but those are the three bureaus, and they're what the most common things you're going to run into. But FICO score, I like to point that out and just kind of tell you the difference because that's what most people know about. What are credit scores? They're actually predictors, is what credit scores are designed for. They're designed to show the likelihood that a borrower will become 90 days late on an account within the next 24 months. So it's really that simple. I was told that from the credit bureau guy who we used to get our credit bureaus, our tri-merge reports from, the guy who taught us about credit back many years ago, and that's what it's from. So they're just simply predictors. All right. Well, why do we care about our credit score? Always a good question. Well, it's your ability to borrow money. Most of us don't have the cash, especially starting out, to just pay for everything in cash. I mean, that used to be a thing when our grandparents, were around. They didn't borrow much money, but then as time went on, things got more expensive. And that's something important. So they did come up with these bureaus and just people's ability to borrow money. I mean, you want to be fundable is what you want. You get better interest rates. It's amazing if you ever calculate the difference on these. I get into these a little bit more in some of the books and things that we've done, but just a matter of 1 or 2% can make a tremendous difference of tens and hundreds of thousands of dollars over the lifetime of some of your loans. Lower insurance premiums. This is something that used to not come into play, but it has in the last several years. Is one of the first things they look at is your credit score to see if you're a good risk for insurance premiums. There are some other factors such as zip codes and things if you're looking at homeowners or renters insurance that are also a factor, but previous claims is another thing. But your insurance is really based on a lot of your credit score. That's one of the first things they look at today. More favorable for employers, business partners. First thing that employers do these days, they're going to pull up your social media, look at your accounts there, and then they're going to pull up your credit score. They're going to look at this and just see how you've handled things. This is why I like to keep my credit in line, because you get to choose who you want to do business with. You have a lot more choices. You don't have to go to somebody that's based on impaired credit. You don't have to go to a creditor like that. You get to actually choose who you want to do business with. Well, how are credit scores determined? This is a good breakdown right here. This will give you an idea of what's really important and what they look for. 35% is based on your payment history. Do you pay your bills on time? I mean, it's just that simple. How do you pay everything? You run late? Do you consistently run late? Do you use your grace period, whatever they call it? We'll talk more about that in a few minutes, but it's just based on your history. 35%, that's important. Pay your bills on time. Types of credit. What types of credit? Do you have mortgages? Do you have auto loans? Do you have store cards? Do you have payday loans and that type of thing? Home equity loans. 10% is just what type of credit accounts you have. Next would be new credit. If you have a lot of new accounts or inquiries, a lot of people don't realize this could be this can actually be a big factor because it's 10% just on getting inquiries. You don't want to run around getting inquiries all over town because that's that can actually take away from your score. 10% may not seem like much, but you could make the difference in a good borrower and just a fair borrower. So that's something to be aware of. Credit history, how long you've had accounts. A lot of times people will close accounts when they pay them off. That's not always in your best interest because the length of time you've had your on the history can make a tremendous difference. 15% is huge. And this is one of the biggest things that a lot of people overlook. 30% of your overall credit score is determined by the proportion of balance to the limits that you have on your accounts. We'll talk more about this here in a minute too. All right, let's go over the 7 steps and then we'll get into a little bit more detail. What we're going to talk about here, these 7 simple steps to elevate your credit score and dominate your future. These are pretty simple. We've broke these down over the years. It can be a lot more complicated, but I like to keep things really simple. Kissers, as I like to say, keep it simple, really simple. And this is what we've developed over the years. Number 1, seems obvious, pay your bills on time. Number 2, don't necessarily close older and are paid off accounts. Number 3, don't get unnecessary inquiries. Number 4, keep your balance in proportion to your limits. Now, they typically say 30 to 40% or less. Yeah, I like to say a lot less, but we'll kind of look at that a little bit in detail here in a minute. Dispute incorrect information. There is a lot of things out there today that may or may not be correct because there's just so much stuff. And a lot of times people are just data entry people that put stuff on there. There's a lot of stuff that is correct too, though. So you just need to be aware of what it is. And you can also add a fraud statement or really any kind of statement on your credit report. I'll show you an example of some that we've used over the years here in a few minutes, but this is something that a lot of times it doesn't help your score, but it can actually help your case if you have something that's maybe doesn't look favorable. So that's something that that we'll talk about here in a minute. I've got a sample that you're welcome to use too. And then self-monitor. You want to kind of look at this stuff about once a year, sometimes more often if you're doing something. And we'll talk more about that in a few minutes here too. Okay, the first thing, the number one thing really is to pay your bills on time. This seems obvious, but a lot of people, just think it is not that important. Today we have automatic or direct payments. Sometimes you still mail it in. You want to make sure you get it there on time, though. But there's some of the more advanced things I've seen lately. I mean, if you get into some really advanced training, they'll say that you don't want to pay it too early today, that you want to get it on time, exactly on time, because that could fluctuate a couple of points. I personally don't worry about that as much. I do pay most of my things on the ahead of the due date, but sometimes you want to pay it exactly on the due date, but you definitely want to have it there before the date is due, or at least by the due date. 30, 60, and 90 days late, that's what they look at. They put you in categories. So if you have a running 30-day late, a running 60-day, or once you get 90 days or past or later, that can be a big deal. So that's you definitely don't want to get in that category. Now, things happen to a lot of us as time goes on, and you can get out of there. The longer you go, if you start making payments on time again, the longer you go since the last payment, that will be taken into consideration, especially your score will reflect that. Things stay on there those 7 years and actually 10 years if it's a bankruptcy, and sometimes more. And sometimes you can dispute stuff and get it off of there, but you really, you just want to be aware of that. And if you have maybe a 30 or 60 or even a 90-day late that's a few years old, it won't reflect as much, even though the creditors can see this. And there's ways you can explain that. We'll talk about that more in just a little bit here. And then grace period. I always like to talk about grace periods because these are really not in your favor. You'll see maybe if your mortgage is due on the 1st, and then they'll say you have till the 15th before it's considered late. Well, yeah, that's probably true with your mortgage company or whatever the creditor is. They're probably going to charge you a late fee if you get over that, even though it's not 30 days late, and they will not report that typically unless it's 30 days late. They can't really do that. 30 days late, it will show up. Now, if you get it in between that period, between the grace period, what they call it, and maybe the 30-day before it's late, they may not show up on the credit bureau, but they will charge you. And there's other things that can come into that. Which, like if they monitor it and some of that kind of stuff. So we'll talk more about that in a few minutes, but that's something. Typically don't use a grace period because it's really not in your favor. One of the things I noticed also when I was a mortgage broker is they will put on interest for every day that you don't have it by the due date. And even if you're in that grace period, when we used to get payoffs, if you made a payment, say 10 days, into your grace period, they'll charge you interest for every day on that. So that's something to be aware of, just on when you pay your bills, getting them there on the actual time, that'll save you money in interest, even if they don't report it late. Don't necessarily close your older or paid off accounts. A lot of times people will get accounts paid off and we'll say, oh, let's go ahead and close it. It's not always in your best interest because there's a big percentage that goes on the history of your accounts. And that could be, that can make all the difference sometimes just on a few points. So it isn't that you necessarily have to use the account, but you don't necessarily want to pay it off. Number 3, don't get unnecessary inquiries. Now, this is something that, sometimes people will go out and they'll shop for stuff and get inquiries all over the place. Now, they do give you a window, something that you did not used to do, where they'll see if you're applying for a mortgage. They typically will give you maybe a 30-day window where they'll let you have multiple inquiries, within a reason. Like if you have if you have 10 or 15, it might be unreasonable, and they don't really tell us what the model is. But they'll give you a window where that doesn't really count too much against you. Same thing with the auto loans. You'll typically get a few weeks or maybe a month to shop for a car. A couple of things, though, that I do want to point out on this. The things you don't want to get unnecessarily inquiries on are, you'll see this a lot too, free gifts and promotions. When I used to go to the stadium a lot for football and actually baseball games, well, the football in particular, they'd give you, I think it was MBNA, used to have a booth set up there all the time, and it was always packed because you'll get a free stadium blanket if you apply for credit today, one of their great credit cards. Well, that's fine, but that's a hit on your credit. That's a hard inquiry. So that's something you want to be aware of. You don't necessarily want to get the blanket just to get, and get yourself a unnecessary inquiry, because that's what that includes. Another thing I typically would see a lot of too is discount for new accounts. This is usually store cards, which are some of the worst accounts you could have. People go to Macy's or Dillard's or one of them, and they'll say, oh, if you just apply for the credit today, we'll give you 10% off right now. Well, it sounds great, but here's the problem with it is it really messes with your proportion of balance to limits. You'll be buying maybe a $500 item or maybe a $490 item. They'll give you like a $500 or $600 credit. Well, that right off the bat takes you all the way up to the maximum amount of credit. You might be a good borrower and think that's not a big deal. You're almost better off buying it with either the cash or with your debit card or a regular revolving credit card, MasterCard, Visa, one of those, because that's something you might already have established, and you're not going to take quite the hit on your proportion of balance to limits. But a lot of people do that, and it's just something you need to be aware of, because unnecessary inquiries can take off to 10% of your score. And I've seen that happen so many times. If you're maybe at a say a 680 credit score or something like that, but 10% could be like 68 points, even 60. If that takes you down to a 620, that puts you in a whole different category. Okay, instead of being able to maybe borrow 85 or 90% on your house, it might put you in a 75 or 80% category. That could be huge. And that could be just from simple stuff like this. So that's something to be very much aware of. Proportion of balance, keeping your balance in proportion to your limits. Now they say at 30 to 40% or less. I typically like to keep it at 20% or less, because that can be a huge difference. This is like 30% over your total overall score. You can have perfect payment history. You've never missed a payment. I've seen this so many times, but people will keep their balances way up. And that typically happens at lower credit limits too. I mean, a lot of times you'll be paying this and wonder why your credit score is low. Well, this can be why. I've seen this happen so many times. And the examples I like to use, let's say you have a $100,000 credit limit. Okay, and you have a 20% balance. Well, that puts you at 20%. With everything else being in line, such as making your payments on time, this is just fine, and it will not count against your score. But let's say that you have only $1,000 limit, but you have a $900 balance or $900 balance. Well, that puts you at 90%. Even though the amounts are way less, the scores don't really reflect, or they don't really care necessarily what the amounts are. It's the percentage. So this right here is huge. And that's something you want to be aware of, just to keep stuff in line, because 30% of your overall credit score is a lot of percentage. Okay, what about incorrect information? Well, you can dispute that. When you get a copy of your credit report, you look at that. If you see anything that's incorrect, and this is the exact template we've used for, actually a couple decades now, but this is basically keep it this simple too. Now, some of this stuff you can do online. I personally like it when you mail it in, and you can even have it, have a tracking number. You don't necessarily have to have a sign for it, but that way they'll have to, you'll be informed when they do get it. But it's simply this simple. To whom it may concern, there's some incorrect information on my credit report that needs to be verified and corrected. And whatever the account name is and the number, it's not mine. I don't owe them. Please verify the information, delete the account when updated, and let me know when it's corrected. Here's what happens. There's about a 30% chance this will happen, even if the information is correct. Now, I'm not telling you to go out there and dispute correct information, but I've seen people do that. But then there's other things to be aware of if you do that. But here's what happens is the creditor has, now they say, I think it's 30 days they have by law to get out to them, anything you dispute, and then back to you. It's typically not always 30 days though. So, I mean, I don't know what you could do if you have any recourse, but just, when you do this, give them some time to get back with you, and they will. If they don't, the creditor has to pay whoever this is that you're disputing the information from, even if it's an old account that's paid off and closed, or even if you maybe still owe it. They have a certain amount of time. They have to get back and either pay a fee saying, yes, it's the account, please update the information. So that could happen. They could say, no, it's been paid off and everything's great. And, and it's not their account, whatever the case may be, they will take that off. Or they can just do nothing and then it drops off. That happens a lot of times, but just be aware, you could be waking up some sleeping dogs when you do that. So just when you dispute incorrect information, I would recommend that it's incorrect to begin with, and maybe verify that. But you don't have to. You can try this and it may work on correct information. I'm not going to tell you to do that, but I've seen people do this. Fraud statement. This is, and any other statement, you got up to 100 words or less on your credit report. This is something I've actually used for myself in the past, and I actually still do now. But when I first came across this was after I got divorced many years ago, and I had some stuff that got behind. Some of the stuff I knew about, some of it I didn't know about. It was a big mess, and I had to really dig myself out of the hole. That was way before I was a mortgage broker, and I had to get myself in line to get an FHA loan. There was a lot more to my own story, but we're not here about my story. But this is simply how it is. You can explain yourself, but using this same thing for a fraud statement is huge today. This is how simple it is. And I do this today. And in fact, I've had my banker actually tell me I was a pain because he had to do this, but this is what I do. And you need to update this, do this about once a year or so, but you just write simply, to whom it may concern, due to identity theft concerns, please add the following fraud statement to my credit report. Do not extend credit to anyone using my name or social security number without first obtaining a government issued picture ID. That right there is huge, because if they give anybody credit for any reason whatsoever without this, you can sue them. And also call me on my personal phone for further verification. Now, when I originally did this, I put my my landline on there. We don't have a landline. I have it for years now, so I use my cell phone. But this is something, those two things right there will prevent any kind of credit fraud. You don't need to pay somebody else to monitor this stuff and do all this stuff for you. You can do this right here yourself. My banker used to tell me I was a pain because they'd have to wait till I got home, and I would be in the evening and then call me. But that's okay. That was a double verification, so nobody could steal my stuff. And I encourage you to do the same thing. This is something you can do right now. Now, as far as what I was telling you earlier about when I got divorced and I had some things going on, I just simply said, due to the fact that I was getting divorced, I had to relocate. Actually, a lot of things happened. I lost my job at the time. I had to redo some stuff. I got behind, but I made everything up and I could explain it. This does not help your credit score. I want to be clear about that. It does not help it one bit. But what it does do is it lets you explain your situation. Sometimes if you're borderline, maybe it's been a couple years, like in my case, and they'll look at that. And sometimes they'll just laugh about it. I mean, because they looked about the stuff about the devastating, just some stuff like that was kind of actually comical, but it's not comical because you can explain yourself. This is very serious, but this will prevent you from anybody using your information for in case they want to set up an account or use an account that you already have. So this is that's a pretty important thing to know right here, and keep it this simple. And just send that to all three of the bureaus. You can do some of this stuff online. I still like to mail stuff in myself, like I said. And here's the other thing too, that we've the last several years, IRS fraud has really gotten crazy. People will actually, and I've seen this happen to a lot of people. Actually, it's happened in the mortgage business more often than I actually thought of. But people will actually go in there and somehow get a hold of your stuff and get your tax refund, create a completely false return, and get several $1,000s back. I've seen this happen so many times, more than, in fact, on more than once, even on the same people. And what they'll do is they'll get a big refund. Then you have to deal with that yourself. So this is a way they can prevent it. Now, this is good for W-2 employees. If you're like me and you're an entrepreneur and you have business income and things like that, you don't have W-2, then it really doesn't apply. But this is something to be aware of. And this is stuff you can share with people right here. This is one I gave you this site. This is what they have online. I still like to mail all the stuff in myself, just for several reasons. It gives you more of a record, but that's something I just wanted to put in there in case you are a W-2 employee. That's something you can do. And it doesn't hurt to be, proactive instead of reactive to some of this kind of stuff too. If you do this in the fraud statement right up front, it's just less things you'll have to worry about down the road, because, I always look at it like, with the most burglar alarms that are sold is the day after somebody gets robbed or burglarized. Do it up front, and the same thing with your fraud statement. Just do, you're better off if you do it up front, then you don't have to have that, that doesn't happen. So self-monitor. This is something that I do recommend about once a year. It's you can do it more often if you want. I would just do it once a year though, and just take a look at it. Now, where would you get these? Well, they're okay, once a year, every 6 months sometimes, but there's some free services out there. I'd kind of recommend those. Credit Karma is a good one. I think there's another one, Credit Sesame or something like that. I've used Credit Karma for, I don't know, many years now. It gives you your score. Now, this is not a true tri-merge report. Like if you were to apply for a mortgage or some kind of major credit there, this is not one I would use, but this will give you a good idea, a good snapshot of what's going on right now. Okay. And, this will tell you your accounts. It will show if you're current, if there's anything you need to look at. Some of the fee services out there, they are actually the actual credit bureaus themselves. Now you can do a free one once a year. That's easy to find, and they'll do it, but they typically will not give you your scores. That's one thing I do like about the free service, is they do give you your, somewhat of a score. Now, this is not a score, again, like I said, that they use, but this will get you in the ballpark. The fee services, they'll give you a free one, but then they want to charge you money for it. I've always had issues with those though, because even based on my own circumstances, I did this many years ago just to go through the process. And some of the stuff at the time I had maybe 15 or 16 mortgages. Actually, I think I had maybe a few more than that, but I couldn't even remember all the stuff to verify my own stuff. So it was really more of a waste of time. And then I got a hard credit inquiry, which is kind of crazy. So, because there are hard credit, inquiries and soft ones, which is something that you want to kind of be aware of. A soft one is just if they'll check, like account you might have, just to make sure they'll monitor if you're currently doing it. But a hard credit inquiry is if you go and get the stadium blanket, or if you're applying for something new. So that's just something you want to be aware of. But I would self-monitor these at least once a year, so you can kind of keep track. And do this only when it's necessary. You really don't want to do this when you are applying for something, which is what we'll talk about kind of right here. Okay, so which brings us up to, what if you're starting with no credit? You're reestablishing impaired credit. A lot of things happen to a lot of us. I told you about me getting divorced, and some things happen to me, but it happens to a lot of people. We all have life go on. And then what about if you have just a limited ability to obtain credit on your own for whatever reason? Well, you could have a secured credit card account secured by your assets. One of the things we used to do a lot of times when I was in the mortgage business to help people establish or reestablish credit is you could go right to your bank and just see them. Now, not all the banks that will do this, but most of them will. You can take as little as $500 or $1,000, put it in a credit or in a savings account, and then talk to your bank about giving you a secured credit card based on the money that you have in there, the secured amount. Now, what typically we'll recommend is just use a little bit. A lot of times these will be a lot higher interest rates. You might be paying 20-25% interest on some of these accounts that are secured, but it doesn't matter. Sometimes it's not the interest rate you pay, but what you get out of it. There's There are some other accounts that will establish these, and we've talked a little bit more about these and some deeper things, but there's some accounts that will start you off with a $300 or $500 card to give you a second chance. They might be charging you 25, 28%. It doesn't matter. What I normally recommend, buy a tank of gas. Well, I used to say a tank of gas a month. Now it might be a little bit more than that. But if you got a $300 limit, let's say it does cost you $100, just do that once a month and pay it off. After about 6 months, even with no credit or limited credit, that's going to really work on improving your score. And that's really what we're talking about here. This is a way to do it. There's no quick fix. There's no magic pill. There's nothing, no overnight way to do this. Although I've seen, scores, we've increased scores 150% in 1 month. I've also seen them go down, because once you start doing stuff with your credit, sometimes you're going to wake up stuff that you don't want to wake up, and it's going to be a building process to get out. Co-signer or authorized user in someone else's account. This can be very effective and very good. You do got to be aware of this, though. If you sign for anybody else, make sure that they're somebody you can be trustworthy, somebody you can trust, because if they don't make the payments, it's coming to you. Then again, you can put somebody on your credit card, just make them an authorized user. I've seen this happen a lot for children or people that actually have gotten divorced and things happen like that. Somebody that needs to reestablish some credit. But just if you're going to let somebody else be a authorized user on your account, I would recommend not giving them a copy of your credit. Don't give them a duplicate card. Just do not do it. That's what I would recommend. Now, this, if it's your kid away to college or something like that, and you want to do that, just really kind of monitor that kind of stuff. As far as a car loan, I personally would not sign for anyone for that. Those are almost a horror story. That almost equals, we used to joke about it, equals 7 years of bad luck anytime you sign for somebody else for a car loan. But you can use that. I've actually seen one that worked out over all the years when we used to do it, and it's usually even on when they voluntarily give it back and things like that. Very rarely does it work out in your favor. So just be aware of that. Make sure it's a trustworthy relationship. If you do that, if you're somebody that needs to be an authorized user, though, just be aware of that and respect whoever it is that's going to help you out. Bankruptcies, Chapter 7 is actually a debt elimination. We're not going to get much into that, but what that does, it completely wipes out all your debts. You're going to need an attorney. You're going to need to go to court. There's a lot more to it than that. As far as your credit score, though, goes, most of the time, you'll be probably flooded with offers anytime you file this, and especially right after it is discharged, after you go to court, because it does wipe out everything. You're starting off with a clean slate. Even though it all looks negative before that, you're going to start off from now, and then you'll have a chance to reestablish your credit and start over. As far as a Chapter 13, this is a restructure, repayment of your debts. The court will actually come up with a plan for you. This could actually help you. I've seen people one day out of a Chapter 13 after they paid it for several years, paying back all their debts, and then they could actually even get a 95 and 100% loan after that. We've done it. One day out of bankruptcy, we had it all set up because after you're making payments for a while, 6, 8 months, 12 months, it actually looks like on-time payments again, because that's what it is. It doesn't necessarily, even though stuff shows up, it doesn't necessarily matter what's happened up until the court date, but it's going to show from now on. But then that all has to be taken into consideration. This does not wipe out things. It just restructures it and gives you a little breathing room. Sometimes that's what people need. And one thing I really want to make you aware of, collections judgments, I call them sleeping dogs, because like tax lien stuff like that stuff doesn't go away. You're going to have to deal with that. But some of the collections and judgments, even medical things, sometimes, they put this stuff on your credit report, and sometimes if you'll go for you're going for a mortgage or something, they're going to require you to get some of this stuff straightened out, either pay it, get it cleaned up. Sometimes you might have had this already paid off. And if that's the case, just tell them, see if you can get that removed. Sometimes, though, you're going to wake up a sleeping dog. Let's say you haven't heard from a judgment, that somebody that reported something on there, maybe an old cell phone or even a payday loan or some of that kind of stuff. for maybe, 5 years or more, but you go ahead and they start looking at your credit, doing something. If they get contacted, you may be waking up that sleeping dog, I like to call it, and they're going to start hounding you again. All of a sudden, instead of an old judgment, it could be a newer one. Once that stuff is updated, that dramatically and directly affects your score. If you do need to have anybody, you have to have a judgment or a collection that's paid off for, in order to get a loan or something like that. I would normally recommend a third-party negotiator. This does not necessarily have to be an attorney, although sometimes it helps. We used to do that in our collection department, in our mortgage company. We had some people that actually did that, and I'll tell you why a third party person works a lot of times, because they're not emotional. Sometimes, people, and it's not that you might do it directly, but like, let's say you did get divorced and you still have a bitter taste in your mouth about that. You can, it's easy to get emotional in some of this kind of stuff. Emotions never help when you're messing with legal things. Very rarely, I should say, do they ever help. So if you have somebody else go in there, and here's what they can do too. They can actually negotiate a better price. Let's say you have a $5,000 judgment that needs to be paid off before you can qualify for a mortgage loan. Well, you might be able to go in there, and here's what we used to do. We'd say, well, hey, we will give you, and I'd see what we had to work with, but we'd say we can give you $2,232.27. I like to use exact numbers because it is accurate a lot of times. But what happens, they'll most of the time they'll look at it like you've really put some time and effort into figuring out what you have to work with. Just say we're going for a mortgage loan. This is what we have to work with. The other thing that you want to be sure of, if you do this, whether you do it yourself or have somebody else do it, is have them remove it from your credit score based upon when they get your payment. So what I mean by that, let's just, the example we use, the $2,200 or whatever we agreed on to pay it at the same time, and have that on their letterhead that they get their payment, they will completely remove this from your credit report, from all three of them. Get that in writing and make sure that that is done. That right there, just from that elimination, it may take you a few days or even a couple of weeks before it shows up with your on your score and it's adjusted. But this is a great way to actually get this stuff removed. I've seen judgments, collections removed that were only a year old, or sometimes even less than a year old, even though they can stay there 7 years or more. So this is a great way to do it. And just those templates I gave you on the letters here, that's the stuff we actually use just for that. Okay, what not to do. Let's talk about that for a minute. First of all, do not go to a credit doctor or repair company. And again, I mentioned this earlier. I don't care if they have attorney behind their name or whatever. I have questioned, I don't know, so many of these over the years. I have never seen one that could do anything you cannot do yourself. And everything we've talked about today, this is all stuff you can do yourself. It doesn't cost you a dime. One reason I put this stuff together, because we used to work with our clients. I've worked with them sometimes as much as a year, 2 years or more, just to get their credit line. This is something that doesn't happen overnight, but if you go get, and what really got me a couple of years ago was this company came around. I don't remember what they're called, MSC or something like that. MES, I don't know. It was a multi-level company, and I questioned a bunch of these people. Most of them didn't even know how the stuff really worked, and all they were doing is trying to get you on there at $99 a month. Okay, well, they didn't do anything for you. Then I've seen them actually ruin people's credit because they didn't stick with the $99, thinking they were getting helped. With the self-monitoring, do this kind of stuff yourself, and you don't need these people. And if you get into that, just be aware that it may not help you at all in the long run. Other thing, don't use a credit monitoring service. And this, there's a few of these out there now. They'll act like they're sitting around watching your credit for some fraud. They're not watching anything. What you're actually doing by paying your $39 or $69 a month or whatever it is, whatever they charge you. I think some of them suck in at $19. What you're doing actually is buying insurance. Okay. If you read what it actually says, it's like, well, we'll pay up to $1 million if somebody gets in here with fraud and all that kind of stuff. Well, I just showed you how to put a fraud statement statement on your credit, but all you're doing is buying insurance. They're not going to watch this, and they really don't care. If they can prove somebody actually, this is a process too. In the meantime, your credit's getting hammered and you might have collectors going after you for this kind of stuff. You don't need to pay for any of this kind of stuff out there. And the other thing is sometimes the credit account companies, I know some of the credit card companies will say, oh, we're going to automatically, as a benefit for your account, we will monitor this every month. That's most of the time not in your best interest either. And I'll tell you why. If you read the fine print, what happens is, if you look at the fine print, is some of these people say they'll monitor it every month. Well, you'll have to really read it, because what happens, and I've seen this happen more than once, if you get behind, say 30 or 60 days late on another account that has nothing to do with them, by the terms of the agreement that you agreed to, they can raise your interest rate and change your terms. And they've actually do it. And I don't know what it was. One of the cards, I won't mention the name because it's a pretty major one. Not a Visa or MasterCard, but one of the others used to do this all the time. And I've seen them go from maybe a 15% interest rate up to a 38% interest rate, just because somebody was late on a different account for different reasons. And actually the account was tied up from an ex-spouse or a soon-to-be ex-spouse, and they were responsible. And it doesn't matter what the judge says in court. If you're on the credit account, you're directly responsible. Well, if they see that you have a late charge on there, this monitoring service, which you think is helping you, is not doing you any favors. It will actually cost you money. So just be aware of those things right there. Other thing is, don't work on your credit right before a major purchase. I used to see this happen all the time. By not self-monitoring once a year and just seeing what's on there, people wait till they're ready to buy a house or refinance, and all of a sudden you had something, and it may not even be yours. It could be a collection with from somebody with a name similar to yours. This stuff happens all the time. Well, you may not have time to work on this. If you only have 30 days and your interest rate's going to change, or whatever the case may be, and now you've got to work on your credit, because sometimes this stuff takes a few months before it gets straightened out. We talked earlier about they have, in disputes, they have 30 days by law to get back in touch with you, and it may or may not happen. So just be aware of that, and that's why it's better to do this stuff up front. So those are three major things I think you just need to be aware of, what not to do. So those are the 7 simple steps. Pay your bills on time. Don't necessarily close older and are paid off accounts. Don't get unnecessary inquiries. Keep your balance in proportion to limits at 30 to 40% or less. Again, we talked about a lot less. I'd really like to keep mine at less than 20%. Dispute incorrect information. You can also add a fraud and or any kind of statement you want up to 100 words, and then self-monitor. And that's our credit score basics. 7 simple steps to elevate your credit score, dominate your future. And this was based on the book I wrote a few years ago, Secrets Those Credit Doctors Don't Want You to Know. If you would like to have a copy of these slides, you're certainly welcome to do that. Just send me a request and send it to my email, thedealionaire@gmail.com. So that's the basics. Anybody have any questions? We'll go over there. There we are. A lot of stuff real quick, but I wanted to get it all in. So anybody have anything they want to say?
You disappeared.
Hello?
You disappeared.
I disappeared.
I got you back.
Okay, I'm here.
John, since you said you put that on just for me, I want to give you a gold star for that. It's very good data. The only thing is, because mine had just dropped points, and I'm going, I didn't understand it before, but what I have worked out in my case, when we quit using our credit cards and there was 0 usage, they dropped it down.
Yes. Yes, utilization is something that's very important. If you don't use your cards in about a year, you could have that can happen. You want to have utilization, and that's why I recommend buying a tank of gas, just like when we showed starting or reestablishing credit with maybe a secured card. Use it regularly, and maybe just once every 6 months. That's it. Especially like in your case, Dwayne, if you're going to travel, because this has happened to me and I know other people, if you're going to travel, call the credit card companies and say, I haven't used it in a while. I'm getting ready to go to Utah, or I'm getting ready to go to New York, or wherever you're at, and then use it and try it out before you go. Go buy a tank of gas, or now I'd say just go buy a lunch for $30 or $40. A tank of gas is cost you, like my truck, $140 now. So that maybe, if you're reestablishing credit, you got a $300 limit. You don't want to do that, but yeah, just utilization is so important. Yeah. You want to make sure you use it.
John, that's interesting because when I first got into the real estate business, the previous mentors that we had suggested that we take out as many credit cards as possible.
Uh-oh.
So I applied to a lot of credit cards, and I don't use them, and I haven't for years. So should I be canceling those, or because I'm not going to utilize all of them?
Have you ever used them?
Probably one I did. Well, 3 of them I did. There were another 2 or 3 that I did not.
Okay, I would at this point, Gene, I would not cancel them because your history is huge. Okay, people a lot of times they'll use stuff for a short period of time, then pay it off and then close them. That a lot of times that can hurt you more. It can help you. Okay, not using them, even though it doesn't really help you because it's not going to help your score.
Okay.
Yeah, you lose it. Huge. Mm-hmm.
The fraud prevention, do you send that statement to all 3 credit report companies?
Yes, absolutely. Yes, because they're all separate, even though a tri-merge report is what I kind of talked about here. That's what they're typically going to do if you go to a bank, you're applying for a mortgage or any kind of major credit. They're going to pull up a tri-merge report and look at all 3 bureaus. Everything is not reported to all 3 because they have to pay a fee. Sometimes, like I know my bank, I have many mortgage loans with the local bank, or regional, I guess it should say, and they report to only 2 out of the 3 bureaus. And I think a couple of them reported to all 3, but then they look at all 3 whenever I apply for them. So, you would just want to, I would send it to all 3. That statement right there, that can save you a lot. And I recommend both ways: a government ID, picture ID, and and your phone number. Make them call you. It's just those 2 things right there. And if you're already paying a monitoring company or something like that, you can save that money. There's no sense in paying anything. I mean, you're talking a couple of stamps to do this once a year, twice a year. If you do it every 6 months, that's huge right there.
And as far as, Lynn and I have good credit reports personally, but does that extend to your LLC, or is there a separate report for your LLCs?
Well, a lot of people talk about business credit and stuff like that. My experience is I had to guarantee everything to begin with, personal guarantee. Then they will go with my company name. Now, I don't really worry about my company's credit. I have a few different companies I do business in. When I first started, they would not let me do that until I had a little bit of a payment history. Then I would transfer the stuff over. As I got a history, though, my personal history, and I still do this now. Now I put in fact, most things in my company name when I buy it, because I have a history. They know I'm still going to personally guarantee it, but I don't worry too much about that. And there's people out there still tell you today. I've seen one not too long ago that says, "Oh, well, you can get a separate tax ID number and forget your regular credit." My experience is it doesn't work that way. It didn't work that way for me, and I have yet to see anybody else that really worked that well for it. I mean, if you do it, man, I'd love to hear about it. That'd be a great story, but that's just my own personal, experience with it. So I would just worry about your own self, and then use your LLCs though, and your companies to do business in. I mean, ideally that gives you some protection. It's not as good as a trust, but that's another story. But I mean, but as far as your credit goes, there's no magic. They're going to look at you. That's just my experience.
Yeah. Okay. Yeah. Because even having a line of credit, we lost that line of credit because we don't have personal income, because we're both retired. So, yeah.
Yeah. Yeah, you just need a credit history. I mean, I couldn't verify, and I still probably couldn't personal income for I don't know how many years now, probably a few decades. And in fact, the banker, the guy I dealt with, he would always, all I have to do is call him, and he would give me whatever I want. I mean, you have to work up to that relationship. He'd always say, "I don't know how you do it. You got a 838 credit score, and you don't show any income, but you got all these accounts, you got dozens of mortgages." And he goes, "And I'll give you anything you want." He goes, "But you can't verify anything." I said, "I know. That's just, but that you have to work to that. I mean, my credit, I mean, if you pulled up any of my companies, I don't even know how that would even look, and I don't care. You hear people talk about, the Dun and Bradstreet rating and all this kind of stuff. I guess that's great, and especially if you can get into your Fortune top 400 or whatever you might be able to get into. But my experience is no. I need to have me first, and then my company second. But I put everything in my companies first as time went on.
Okay.
So that's just what I did. Utilization, though, what you just said right there, and Dwayne brought, I'm glad you brought that up. That is something that's really important. You need to use your stuff every once in a while. And especially like if you're going on a trip, I've had people get out of town. I've had my cards when I got out of town, tried to use it, wouldn't do it. I got on the phone, got it straightened out. But just as little as stuff like paying for your bag at the airport, they wouldn't take my American Express. It's like, okay, well, wait a minute, because they don't take cash anymore. You have to have a card at some of these places. So before you go, because there's a lot of us that don't use our credit cards all the time, like Dwayne was just saying, there's, but utilization, use it, and just call them before you go out of town or before you're going to go do something. And just so everybody knows about it. So.
Yeah, I'll chime in and tell you that I only have 4 credit cards total, and all of them are Discover, actually. And I also know that you can get a free credit report on every one of them once a year. So considering there's 3 agencies every 4 months, you can pull one.
Yep.
And get and that's what I did for what it's worth. When I did run into that out of town thing once, and I only ran into that once, you called Discover up and they said, "Oh, we saw that and we didn't think you were out there." So yep. No problem. And it was fixed instantly. And so I'm a real fan of them.
Just be aware of the monitoring they do. And you probably don't have to worry about it, Dwayne, but they are one of the companies that will charge you higher interest rates based on other accounts. So that's something.
Discover?
Yes, just be aware of that. I doubt if you'll have to worry about it, but I've seen them jack up interest rates, 20 points higher because somebody was late on a different account because of the divorce. So just be aware.
There's no excuse for being late in my book, and we pay all of ours probably 2 or 3 times a month, and we keep it down to almost 0.
I know they probably hate you because they don't make money on you, Dwayne.
I have a joke that every time I talk to them, I have to go brush my teeth afterwards because they're so sweet. I know I'm going to get cavities.
Yep. Yeah, there's a lot of accounts that we probably already have where you can get your free credit reports ever so often. I don't push, I don't really talk about where you can do that because there are a lot of them out there. I like the free service just for what we're talking about today, though, to get started. If you really want to have a good tri-merge report and you don't want to pay for it, go apply for something and just do it once that you're not going to get. Go apply for a $500,000 mortgage when you know your income won't do it at a local bank, and then ask them for a copy of your report. We used to do that all the time. And that's a way you'll get a true tri-merge report. I don't recommend doing that a lot because it will give you a hard inquiry. But if you only have one, it's not that big a deal if you're not really going for something. But you never know. Maybe you'll get that $500,000 loan. Maybe that will make all the difference. Who knows?
And Jeanine, one other thing is you guys using a line of credit. That is the golden of gold. There's nothing better than to have a good line of credit. And once you have that, you're unstoppable, I think.
Yeah, unfortunately, we lost it
Oh.
because yeah, we did.
Well, when we started our business, we still had a friend that worked at a bank that knew me from a previous business and kind of went out on a limb and used some mutual fund accounts that I deposited at the bank as collateral, but I still had some W-2 income at the time. And unfortunately, this past year, I've had no W-2 income and I'm not showing any source of income. So they would not renew it based on that information.
Yeah, I would say that last statement about no other source of income, because I had rentals before, and
Yeah.
that's what I get my lines of credit. And I know people preach you can't get a line of credit against a rental, and that's not true. You just got to know where to go.
You can, yes.
What I have is a business line of credit, it's what they call it. So they like to see it go up and down, up and down.
Right. They want to see activity. They don't like it to be dormant for too long. I understand.
Yes.
Yeah.
And I have a lovely lady banker that's the one that makes the decisions. So
Ah.
you know, I just stumbled onto her and I said, so who actually makes the decision? And she just looked at me and said, I'm the decision maker, unless it's a huge thing and I have to take it to the board. And I went,
Isn't-
you're the lady I
That
want
means
to know.
everything. Yeah. That's a
Absolutely.
good relationship.
Yeah.
Relationships is number one on everything we're talking about right there. If you could have a bank like that, a banker like that, Dwayne, you are ahead of 90% of the people out there.
Got it.
Well, the only reason I lost my big line of credit was because we sold out all of our properties. So I knew that was gone, but the small one I have, it's only for like 70 or 80,000, but for the houses I buy, that's just chump change and I can get it in a heartbeat. So, and I like being able to just send them an email and then it shows up in my account.
Mhm.
Yep.
So, yeah, lines of credit, I'm a real fan of.
Yeah, John, your fraud letter is not the same as a freeze, correct? Because I think years ago you said freezes are not good or you didn't like them.
I don't like it. Yeah, it's not the same. I do not like freezes because I've seen people get messed up with that. No, the fraud letter simply states they have to get a hold of you personally and nobody else can use it without exactly those two things, which is calling you. I like to call. You don't have to put that on there, but a government ID of the picture. Freezes, people do that all the time. I've seen that, but that can actually mess you up somewhat and be inconvenient for you. I mean, I'm just not a fan of that. You can do whatever you want. You can go freeze them and only undo it when you're going to use it, but it just causes other inconveniences.
And do you send a certified letter to each of the 3 credit bureaus like every 6 months? You were saying you do that fairly often. I don't know if you send certified or just send it regular mail. If you need that certification saying that they've actually received it.
I personally like registered and not certified. Certified, they have to sign for. Registered just gives you a tracking number, knowing when they get it. I use those all the time. I just sent out some deeds and stuff this week that's the way I did it because I didn't want to make it real inconvenient for the guy in case he misses the post, the postman or the letter carrier and has to run to the post office. And I've had to chase stuff around with money and everything like from overseas before when somebody sent it that way. I had to sign for it. Sometimes, you don't know where it's going to be. And it took me an extra 3, 4, or 5 days to get it. I like to make it registered though, where you have a tracking number and you just go to USPS.com, type in your number and they show you where it's at. Oh, it's sitting in Virginia, even though it's going to California or whatever, because they send stuff over, but you can kind of track it. That's what I personally like to do, Bruce.
And you do that about every 6 months for each of the 3 of them. And also I just checked on federaltradecommission.gov yesterday. And apparently with this COVID stuff, they still are saying that you can get a free weekly credit report through December of this year. So that if anybody wants to check each of the credit reports and make sure that they're okay, they could do it, for example, immediately. And if they find something, they could send out that dispute letter, like you said, and I guess you wait 90 days and then they could check it again and make sure that the credit reports have been corrected, because we're still over 6 months away, 5 months away, whatever, from the December deadline, according to the FTC.
Yeah, I personally do it every first question every once a year about, I don't do it every 6 months. You can do it every 6 months because it seems sometimes it kind of runs out. Yeah, there's a lot of things like that. The thing with the, with the government and all that, they're not necessarily going to give you the score. They will show you a report, and it's nothing different than what I'm telling you here, though. I mean, they're putting more information out there now. I guess if they're going to do 90 days, that's fine. My experience are, if they tell you by law, if you go look up the all the rules, they tell you by law it's 30 days to go out, 30 days come back. They're saying 90 now. Nobody's ever actually followed the rules anyway. To be honest with you, it doesn't matter what it says on there. Sometimes I've had them back within 6-7 days. I mean, I've seen it get cleared up that quick. I've also seen stuff that took months, 2-3 months down the road. So that's one reason I like to point out, don't do it anytime that you're needing credit. Do this. You work on your credit score when you do not need it, when it's not critical, because you could wake up a sleeping dog, and many times you do. Most of the time with the people we worked with in the past, when we were, getting them in line for a better loan or getting them in line for a loan, most of the time it worked, but not every time. You don't know who that sleeping dog is, especially with collections and judgments. What happens is, even though you think this account might not be yours because it's a different name and different amount, it could be one that was transferred from an account that was yours. I've seen the same account with 3 different names and 3 different numbers, and you dispute 1 or 2, it wakes up the original sleeping dog. And then all of a sudden you got everybody after you because it wasn't a paid account. Now you've got 3 fresh credit account or collection accounts, even though it might only be 1 account that's involved. So, I mean, there's a lot of factors once you start doing this stuff. That's why I recommend do it when you don't need it, But that's, as far as, right now they probably do have a lot of stuff out there. The government's done a lot of things, recently, the last couple of years that they didn't normally have on there before. There's different. Nothing is really different as far as the laws go, though, in your credit. It's all still the same stuff, same credit bureaus. Everything is still the same. The scores are calculated the same way. So that's just something to keep in mind. What I'm showing you here, these are basics, but this is exactly how it works. And we've done this for decades. I mean, I was a mortgage broker for many years. And when I started, and this is how I actually got into it, first of all, I learned most of the stuff when I got divorced and I had to do stuff digging myself out of the hole. But I worked with people that were kind of the tougher ones to deal with. Because when I first got in the mortgage business, I was the new guy. Well, they gave me all the ones that nobody else could get financed. So I had to figure out how to do it. Most of them, it all came down to this because they had different things. There was a lot of fraud even back then, and it was usually relatives back then. I'd see people's cousins that would just borrow their accounts while they were deployed over in Iraq. I mean, I'd see stuff like this. People would just, take their sister's, credit report because they were out of the country or something would happen. They'd ring up these accounts and not pay it. And then they'd come back with all these big surprises. Well, we had to figure out how to do this stuff. That's where all this, I'm telling you, came from. And I put it down in writing and got more detailed once these credit doctors came around and started ripping everybody off. So that's where I came from this. So, and I'm not selling you nothing. I have nothing to gain from doing this other than I want to give you this information because I think it's critical to know. And I don't like people getting ripped off, basically. So that's where this came from. If you want to know more,
Gina Braxton has a question.
Yeah, just unmute yourself, Gina. You don't have to.
John, I heard one time that if you have credit, and how did that go? They said something about if you report it, and I'm trying to think of how that went, but it was something like you could have the credit, and if you didn't use it, you were fine. But then if you used it, and I'm trying to think of how that went, but it was something you just said. I had the question ready, but I forgot exactly how it went. But
Something to do with utilization, Gina?
Yeah, pretty much.
Okay, I've never seen them charging you. I have seen them cancel your accounts, though, if you didn't use it. I had one that I had for 20 years. They canceled me because I didn't use it. And that's another reason for utilization. They didn't find me, but they wanted me to start over with that account, which I did not do but they took away my history. which really, it didn't help me at all. And it just kind of, that's why, I like to say, don't close necessarily older accounts because they can hurt you. But then again, I've never heard of one charging you as you didn't use. But yeah, do you want to have the utilization? You want to use it?
Okay, thank you.
Mhm.
And John, I guess you were saying the FICO scores are particular to Experian and Equifax and TransUnion have their own name for it. But most people hear about the FICO score. But if you wanted to find out what any of those three scores are for free, you might be able to do that by contacting your credit card company or your credit union or your bank. But make sure that it's not going to be a hard inquiry. I guess ask that question at the same time. Is that the way I understood that? Is that correct?
Yeah, I would just be aware of that. I mean, unless you had a specific reason, I would not do it. Okay, because they're probably going to give you a hard inquiry more than likely. The soft inquiries are where they just look every month. But if you do something like that, they may do it. And that's another reason, like I said, if you're gonna do that, apply for something you don't think you can get and just get a nice free tri-merge report with all the bells and whistles. If you're going to do that, that's what I would recommend. I mean, as far as the soft inquiries, I just use the free service is what I would do, and get the score from Credit Karma or one of them. I wouldn't worry so much about it unless you're really going for something, and just make sure you're doing it when you don't need something. Because 10 or 15, 30 points, man, can make a huge difference on your rates. And I'm just telling you from my experience. I've worked with so many people over the years. That's exactly how it is. I would not go to necessarily, Bruce, my credit card company and ask them about anything like that, because they will monitor, but then you have the danger of them finding something. Even if it wasn't you, but they might find something that somebody put in your account, on your report, that maybe it's not you and they had a late payment, and all of a sudden they want to raise your rate, your interest rate or something like that. You might be able to get that straightened out, but it might be a month or 2 or 3 or 4. I mean, I've seen stuff take 6 months to get straightened out, before. And that's why you want to just do this when you have no danger of that happening to you, or less danger, I should say, because you never know what's going to happen from year to year or from month to month. But it's just something to be aware of. Just don't do anything you don't have to do, but monitor it once a year. I recommend getting in there at least once a year and do some self-monitoring. I would not pay a monitoring company. I would not pay anybody else to do this. I mean, that's just me personally. If you want to do it, you're welcome to do it. I'm not telling you not to do it because I'm not giving you advice. I'm just telling you based on my experience with people I worked on with, and worked on their accounts. This is what we've gone, what we've gone through.
I got a short story about Credit Karma. I was going to sell a lady a house, and the banker said, go to Credit Karma and check your credit. So I was there when we did that. She pulled it up. It showed a $10,000 lien she had against her. She said, I don't even know what that is. So she says, how do I get rid of it? And, most of us don't know that. And I was in new territory, so it was really exciting. But I said, hey, there's a phone number. Call them. She called them. They said, oh, that's not you. And he said, just a minute. And he came back in less than 2 minutes, and they'd taken it off her credit.
Mm-hmm.
Wow.
And I went, wow, that's was exciting. And that was the banker that said, go look at them. They'll help you a bunch to get stuff off there that shouldn't be.
Mm-hmm. I'm a
So
big
I
fan
don't
of
know
it.
one from the other.
I'm a big fan. That's a great point, Dwayne. I don't want to push them because I'm not trying to sell any services here, but that's a free service. It's one of the oldest ones. We've had good luck. Just like that. That was pretty smart for that banker to do that. I have not heard of anybody else telling people to do that, but that we would do that sometimes too. Tell them start there first before I pull a hard inquiry, give you a hard inquiry and pull up the tri-merge, because they're going to do it anyway. I mean, they're going to do it, but it's one less thing, because all of a sudden they'll pull it up and see this bad stuff. It's already in your file. They've already created the file at the bank, where if you do a little bit proactively first and look at it, then you could probably straighten that out before the banker pulls it up. So I'm glad you brought that up, Dwayne, because they are a company that we've used and they've helped us.
Yes, and some banks have what they call a second chance, and you can work with them. And for what it's worth, the guy that we used that helped that lady to go out there is with Great Southern Bank. And I mean, they had a lot of, can help these people.
Mm-hmm.
But I mean, considering the business we're in, they think we're risky, and I think we're the only ones that aren't risky. So
I agree with you.
If you're doing it right, we're okay. If you're doing it wrong, you're always in trouble.
Yep.
And
I
you
agree
may
with-
have said this before, John, but I think I saw a little information that if you have a difference between your FICO score, as an example, between 800 and 600, by that drop of approximately 200 points, they could charge you 1.5% more on a loan, which would, for some people, make it so they couldn't get a loan at all, like if they're buying a house or something else. Yeah, so those numbers can make a big difference sometimes.
Oh,
Oh,
that's-
absolutely. Mhm.
Bruce, I've seen that on my insurance, that it go up a couple $100 for the people with the lower credit score.
Yep, exactly.
And John talked about all of that. Yeah,
Yep,
I thought that was good.
yep. Makes it all makes a difference. And sometimes just a couple of points. I've seen, 8 or 10 points make all the difference on somebody even getting a loan. If they're borderline and, depending on other factors. Yeah, I mean, just a few points can make all the difference.
What,
Hey,
oh,
John.
go ahead, sorry.
Hi, Laura.
Let's go ahead. You first.
So does an authorized user on somebody else's credit card account, like somebody has a credit card account and then they make me an authorized user. So now I have my own card with my own credit card number on it, but the primary card holder is not me. Does my paying my card on time all the time or ahead of time all the time, does that improve my credit at all? Or as an authorized user, it doesn't have any impact?
It helps tremendously, Laurel. What happens is it'll be the same number. First of all, it's the same account. You will instantly pick up whatever their history is, good or bad. So if they've had their card for 5 years and made on-time payments, you're immediately going to have a 5-year history with good payments on there.
Ah.
Now, as you use it, if they give you your card, as you use it, you're going to want to make sure you keep that on time too, because that'll help or hurt their credit the same way it's helping or hurting yours. So that's something, that's why I say it has to be a trustworthy relationship that you guys have, whoever that may be. And especially if you're loaning out your card to somebody too. A lot of times it's, family members and things like that. Sometimes it's not, it just depends on the relationship, but you got to be really in close contact and kind of know what's going on both sides. But yeah, you will pick up everything. In fact, we used to use that a lot of times for people like, with children. Sometimes they might have been away to college and they're wanting to buy their first house or whatever the case may be. They might be 24, 25, 30 years old, something like that, but they never had really credit. Well, a lot of times we can make them an authorized user on one of their parents' accounts. They can do it, they initiate that. But yeah, that'll all of a sudden give them a Visa or MasterCard history of 5-10 years or whatever, then they'll have an account. So yeah, that can go either way. But yeah, it definitely works, and that's a really good strategy to use.
Good.
Mhm.
One other question has to do with bankruptcy. So I had heard, and I do know people who've been through bankruptcy. I don't know if we all do, but Chapter 7 bankruptcy, where you get out from under debt, whatever that debt may be.
Mhm.
I understood that it was 7 years, and after 7 years, it's erased from your history. But that's not the case. I heard you say 10 years earlier. And what happens in 10 years? Does it get erased, or what is the impact of a Chapter 7 bankruptcy on credit?
They say, okay, here's how it works with bankruptcies and collections. They say 7 years by law. Okay. It can go as long as 10 years. That's very possible. Okay. Now, is it against the law? Yes and no, maybe. It's just like trying to say they have to get back with you within 30 days. Yes or no? Who are you going to sue? What are they going to do? You're going to sue the government? Good luck with that one. Okay. That will not be a major factor though. Okay. The biggest thing is what you've done since that was filed, whether it's a Chapter 7, the elimination, or a Chapter 13, which is a repayment. It doesn't really make a lot of difference. It's what you've done to establish since then. That's the important thing, because one day out of a Chapter 13, after you paid everything off, because you really can't do anything while that's going on, but during that period, then one day after that, then you're eligible for new stuff. Now there's exceptions to all that, of course, and we won't get into that because there is debt elimination. That's the chapter 7. That'll wipe out everything. It's this clean slate. You're going to start over from that point. It just depends on what you do from that point, though. But 7-10 years, that's also objectionable. I've seen bankruptcies drop off after 3 years. Is it supposed to? No. Would I say anything? No. I just let that go because that's going to be a factor. That's something there. It's just like your collections judgments, late payments. It's going to be there. It may not have a factor after a few years, though. And that's where your explanation can come in, because you could say, hey, look, I got divorced. I mean, I lost my house. Things happened. We all go through life. Life happens to all of us at different times. And that's something, but it may not affect your score or help you or hurt you, but it's not going to, it'll kind of explain your, your situation. And a lot of times that if you're dealing with a local bank, that could be just what you need, just a little bit over the hump,
Yeah.
Mm-hmm.
Okay, well, thank you, because I have to go, but I'm very glad I could be here this morning, and thank you so much for putting this on.
Thank you for being here, Laurel.
Thank you.
That's it. Mm-hmm. Sure.
John,
Hey, Eric, yes.
yes, back in about 2018, I had an incident where I applied for a Chase credit card.
Mm-hmm.
And I made a purchase, and 2 weeks later, they closed an account, right? And they couldn't tell me why they closed it, though I know my usage was only about 30%. So I filed a dispute, and then I had to end up going through a third party to negotiate it, right? And come to find out, we settled with a price, okay? They got paid off. We agreed. We had an agreement. They got paid off. Okay. So after that, the end of the year, I got a 1099.
Mm-hmm.
So they used that as far as yearly income.
Yep.
So, so my thing is this: that is still on my record. So how can I know they said they told me. It'll take to about 7 years before I can get that off my record. Is that true?
That could very well be true, but I wouldn't worry about it too much. You could dispute it, and there's a really good chance they're not going to pay a fee and keep that on here. You could just say it's not your account. Now, I'm not advising you to do that. You could do that though. Okay. And you've got about 60% chance they would take that off. Now, the other thing you could do is just let it go, because that's not going to matter. They will send you a 1099. That's something they started doing a few years ago. They will do that. I personally would probably just let it die where it's at, because you may be waking up something if they update it, and they could. If they update that, that's going to look like a fresher account, because they're going to redate it, because most of the things are automated these days, and those algorithms are just kind of updated. They'll update it. Yeah, it's still a valid, maybe a late payment or whatever the case may be, but you may want to just let it die. But then you may want to try it. If you're not going for a loan right now, it may be something you want to clean up. I don't know, Eric. That's a personal decision you would have to, look at for yourself. But yeah, they can definitely do that. It can stay. It may just go away. I mean, would you say 2018? You're over halfway through it, and if you haven't heard anything and it hasn't affected you, I'd probably just let it go.
Now, would that affect my credit score? Because at the time, I had an 800 credit score, and since I'm going through that dispute, it dropped 200 points.
Yep, it will. It may or may not. The only thing it really affects most of the time is just somebody looking at it, seeing something in the past. And that's where you may be better off just with an explanation letter, Eric, just saying, hey, back then I had whatever XYZ problem, or, whatever the case may be. It was due to this. Maybe it was due to an illness. Maybe it was due to, being out of there's so many different things it could have been. Just be very simple with your explanation and put it on there. Even though that won't affect your score probably is not getting affected very much from that, because it's 4 years old. I mean, it's probably usually after, it's usually about 16, 18 months, something like that. The things don't matter so much unless you wake up the sleeping dogs. And I call them sleeping dogs because that's what they are many times. Everything's fine until you wake them up, and then all of a sudden they can update stuff. Updates can be a killer on scores. And it could be as little as $100 medical bill. But if you update that thing, even if you're going to pay it off, and I've seen this happen many times, people are going to pay it. It's required to be paid off. That's why you don't want to do it unless you're at closing. Most of the times your creditors will let you bring the money to closing and then they will pay it off because you don't care what happens, or, well, you care, but it's not as big a factor after you close on your loan at the table for the next 30 days. You already got your money. You're good to go. Okay. But if you do that even 2 weeks ahead of time and they update that stuff, because what typically happens is the bank will pull it up a day or two ahead of, right before you close your loan, just to look for stuff like this. I've had stuff show up at the closing table from the title company because somebody got a child support put on there from 8 years earlier they didn't know they had from another state the morning of closing, and it wasn't there 2 days earlier with the lender. So I mean, there's stuff like this, but so that kind of stuff right there, a lot of times you're better off leaving that sleeping dog alone. If it's already been taken care of, if you already had somebody negotiated for you and it's not a factor, they're not coming after you, you may want to leave that alone, Eric. Then again, if you just want it off of there completely, you could try to dispute that and then just see what happens, but don't do it if you're going for a loan. That's my advice. Only advice I'll really give you is don't do anything if you're going for a loan. Do it when you don't need to have it adjusted.
And you
Okay.
just pay it off? Wouldn't that be an easier way to do it? Just pay it off unless it's a huge amount of money?
No, I paid it off. That's not a problem. It's paid off. But like I said, next thing I know, in a year, I got a 1099, which I didn't know about that. Right? Nobody discussed that with me, so I got a 1099.
That's on the balance.
What you're saying isn't right. Because if they're giving you a 1099, they're writing that off as though you did not pay it. And if you got a reduction in the cost, that's what they're giving you, and that becomes a taxable event to you, and that's what's getting you. So you only paid what you negotiated. You didn't pay the whole
Yeah, that's what
bill
I'm
off.
saying. When we negotiated, so like I said, that was paid off. But like I said, towards the end of the year, I got a 1099, which I didn't know that was not discussed with me. I mean, that's fine. I mean, it's all paid, done. But my thing is that is still on my credit report, and I was wondering if I could get that taken off there.
Now, see,
Okay, Eric,
that backs up to what the third party negotiator should have done. What I said earlier, when anytime we would do that like there, you have to have it in writing that they will completely remove that account off or make it current with no late payments as of the time they get their money. Most people do not do that, even third party negotiators, but that's what you have to have them do. And you have to have that in writing. Otherwise, the consequence will be exactly what you have. They agreed to a lesser amount, but that still showed late. They still sent you a bill. That's not what you want to have done. By having somebody else negotiate that at a lower amount, you want to have that either removed or shown as paid as agreed is what the term would be. Paid as agreed. Okay, that's the term we actually use, that they actually use in there. But see, that if you have somebody, a third party, even attorneys, most third party negotiators really don't care. They don't have your best interest in mind because of that. And I've seen that happen so many times in the past when we do that. And that's so critical to have them say that and have it on their letterhead, because then you've got a lawsuit against them. Instead, you have absolutely no recourse right now, Eric. All you could do is I would probably dispute it if I were you, just saying, hey, I don't owe this money, because you've already taken care of it. It's 4 years old. They probably will not spend the fee to keep this, to update this and keep it on your account, because they have to pay an amount to do this. Credit bureaus are all in it for profit. I mean, let's just be clear about that. They're not in it for your best interest. They don't really care about you. That's why stuff happens like this, because they really don't care about you. The creditors are the only ones that really make a difference. They're the ones that care. Okay. You could probably dispute that though. And there's a good chance that would come off. Now, you could try it, see what happens. There's a good chance you'll wake up a sleeping dog and they'll just update it. Then you'll have another period. I would say with the being 4 years, I personally probably would let it die. But that's really your choice. Look at it. Have you looked at it lately to see if it's still on there?
Yeah, it's still on there.
Okay. Well,
I looked at it right before we had this. Yeah, it's still on there.
Okay. Well,
yeah, and doesn't it say that it was paid, and it indicates that they wrote off part of it on your credit report? I'll bet it says something to that effect.
No, it just show like the credit card. I forgot exactly the wording on it, but it shows it, it's still on there. But
Yeah.
I no longer have that credit card anymore anyway. So
Most of the time they won't update that, Dwayne. They will not do it because they have to pay a fee unless you really stay on them, and then they may do it. That's why I say up front, you really want to have that up front that they're going to completely either pay it as agreed or remove it. You really want to have that in writing. And I really don't care which one, because most of the time it was fine if they just paid as agreed. Even if they close the account, just leave it there because it shows a history paid as agreed. And that's not going to hurt you. Other than them closing it with but if you have a bad payment history anyway, sometimes you're better off just getting the thing removed. But these people are not really your friends, just like sending you the 1099 at the end of the year. They acted like they're your buddy by we're going to give you a reduction on what it is to pay it off. Yeah, we'll do that. Sure. Okay. Oh yeah, by the way, here. And then try to get recourse on that. You're not going to get it. That's why you have to have it up front on their letterhead in writing. You just have to have that. If I pay it, that's another reason I say pay stuff at closing. If your creditor, especially on something that might be this old, if they require you to pay something, a collection or something, do it at closing, at the closing table. Don't do it one day before, because if they update that thing, you could all of a sudden, it could put you in the category. And even if it just knocks off from updating the thing to, knocks off 10 or 20, 30 points, that could be enough to make all the difference on your loan, where you won't get it, or they'll change the terms of your loan. The credit, your score will have a big major influence on what rate you pay. So that's stuff, and none of us know that stuff. I mean, we did it. The only reason I know most of the stuff is because that's what happened to us over the years working with people, and they're not going to necessarily tell you that. That's one reason I don't like the credit doctors. And like I said, I don't care if they say they're attorneys or whatever. They're all just, they're in it for themselves. They're in it to make money. And, there's so many of them out there that are just not, it's not really helping you. You just need to know for your own self. And that's what we're talking about. But I don't know, Eric, that's really up to you. Whatever you decide is up to you.
okay, if you say that's the good thing, just leave it alone. I'll just leave it alone. I mean, it's been 4 years, so I was just wondering, would that affect me in any way down the line?
It's probably too old. It's probably too old to affect your score. It's still going to be there. And if it comes up, you could explain it. 4 years old is pretty old though. If it was like a year old, year and a half, then you might want to do with that. But anytime you do anything like that, negotiate an amount, make sure you just get that in writing on their letterhead, that what they're going to do, and just insist on them bringing everything paid as agreed, or completely removing it. The medical collections and judgments, things like that, those are usually better off just to remove it. And I've had that happen many times, but they don't all do what they say.
Eric, put on your hat. If you were going to loan me money and you see that 4 years ago, I just walked away from a loan and never paid it, would that make you feel that I wouldn't walk away from you? Or would it put a thing saying, well, if I loan him money, he might walk from me as well as everybody else. So it's better to pay it all back. Even that just as agreed to me is a red flag on your record right there.
Well, that's how a lot of them do report, even if they are paid as agreed. That's one reason they're willing to do that. But some of them do that anyway. They don't report every month because they don't want to pay the fee. They'll just put on their mortgage loans, do that sometimes. They'll just put paid as agreed, and they leave it at that. And then they'll update it like every 6 months or every 9 months or every year. I've had several mortgages do that. So
yeah, but that's negative. In my book, that's real negative.
Well, it's not according to the bureaus or the creditors, but I mean, I agree with you as far as that. But as agreed just means you're making your payments. That's all that means.
That's not what we just discussed, John.
How is that different?
He's walking from part of whatever he agreed to initially to a lower number, which sounds great at the time, but it has long-term ramifications that amount, like say he borrowed $10,000 and they took it down to 5,000. So he's not paying that 5,000. If I put on Eric's hat, I say, look, I paid the 5,000 that you agreed to, we should be done. And they're saying, oh, yeah, you paid that, but you didn't pay us the other 5,000. Therefore, that's going over 5 years and we're going to report it to the IRS. And I know they're doing that.
Well, they report the IRS, but they do not report that to the credit bureau, Dwayne. What they do with that, as agreed, they will just not show amounts. They'll just show your high credit
Sure.
limit and that you paid as agreed. That's all that does. I agree with
Okay.
you. I agree with you on that, what it looks like, but that's not reflected. When they agree to put it on there as agreed, it's just like every other bill that was paid on time, and the amounts, they don't show settlements. That stuff is never reflected on your credit reports. So that's where that could be in your
I
favor.
just spent way too many hours with my credit report to find out that there was nothing on there.
Right.
And there were none of these, they just say, are you on time or not on time? Period. End of story. As agreed means something's awry. And I
Well,
don't have any of those, by the way.
Well, that's, you probably do and don't know it. That's just another way of saying it, but it's the same thing. You don't have anything on there. They're just showing your payment as agreed. It's just like we were saying with mortgages. A lot of them will do that. They don't report every month because they got to pay a fee. But that is not a negative thing as agreed on your report when it shows up, and it doesn't affect your score. It doesn't affect the amounts either. That's what you got to be careful of is making sure it's either removed or paid as agreed or just paid as we said. I mean, there's different ways they can word that, but that's actually a positive thing when it comes down to it. So you don't want them to show anything negative. Negative would be if they would show that it was written off. Now, if they say it's a write-off, profit and loss write-off, that's different. But if they sent you a 1099, they will not say that. Profit and loss write-off will be if they wrote the whole thing off. That's when you typically will get into a collection or even a foreclosure or something like that. Sometimes they will do that. A P&L write-off that's a whole different story there. And there's a lot of things that can come up like that. But yeah, I don't know if I would bring it up though, as far as if it's 4 years old, I probably would just let it die right where it's at, depending on what it says.
Okay.
But that's really up to you. You can try to dispute it. You never know. If they're, chances are they're not going to say anything. But you don't.
I mean, if it doesn't affect me, as far as the score or anything like that, I mean, I'll leave it on there. I just wondered what that affect, me, as far as, because I'm trying to build up my credit back up. But like I said, through the process, I lost 200 points.
Yeah.
Yep.
And I'm slowly building it up. I mean, I'm back to, excellent, but I'm not back to 800 like I want to be, because I'm close to it, but, I want to, I was just wondering would that affect my score at any time?
Well, you could try to get it removed. You can also put an explanation letter on there, or you can just let it go. I mean, if it doesn't show like a P&L write-off or something like that, I would probably let it go. But that's really up to you. You just have to see how it's worded on there, Eric, see what it says. And see
Well,
what
I would think if you want to get it back up, Eric, doing either the secure credit card or a regular credit card and paying it ahead of time. And I know people say, well, it's only 2 or 3 days late. That can affect you, because I've had that happen to me. And I went, whoa, I paid that on time. You didn't get it in your books. Then I actually proved it to them, and it affected my credit score. So, and that's why I'm really adamant about, I tell people that if I'm lending them money, you pay ahead of time. It may say it's the 1st, but you pay it by the 29th or the 30th, because it's going to help you more than me.
Absolutely. That's such a good point. I think Bruce put in there, automate as many as possible. You definitely want to be on time. And I like a few days early myself. Now there's some of these people get into a little bit more detail, say, no, you need to have it there exactly on time, because that can affect it. If it affects it 1 or 2 points, I'm not going to worry about it. I'd rather be on time. Don't use your grace period like we kind of talked about, because they'll ding you for it. You'll pay extra. They'll ding you for all that stuff. I mean, that's really critical. On time and a couple of days early. If it's on the 1st, like you said, Dwayne, I like to even have it like a week ahead of time. I like to start really having stuff, prepared to pay it. But yeah, absolutely.
And with that in mind, another piece of trivia. There is one institution in town, you can tell them you want it paid on the 15th, and they may be 2 or 3 days late every friggin' month, and you're chasing where your money is. And And the people I'm dealing with now, I say, if that's where you're gonna have the money sent from, it ain't gonna work for me because they don't get it there on time.
Yeah, there's some that use the float. I don't know. They used to call it, float it so they
Yep.
can make a little interest on it. I don't know. There's not that much interest now, but I personally don't like that either. I like instant stuff. If I say I'm going to do it, I want it done now. So yeah, it's all factors to be aware of. But you really want to have it on time, because even if it's like a day or two late, they don't report it 30 days late on the credit bureau, that could still affect you tremendously. That can make all the difference, on stuff. And even with the credit history with them, if they show you running 2 or 3 days late every month, just like you're saying on a different service, if it's not your fault, it doesn't matter. It's still you. And at the end of the day, it's still you, the one that has to deal with it. So.
But if you cut your hair like mine, you'll get a better rate too. That'll help.
Less shampoo, you'll save money.
Making money now.
I know. I've been thinking about that, Dwayne. Mine's a little bit longer than yours.
Yeah, I know. You look like a hippie.
I know. I really need one. It's getting hot out there too again.
You think?
Yep. Yeah, we all need to go to your barber, Dwayne.
Works for me.
I like it. Yep.
And I've been told more than once that once you're over 725, it doesn't matter. But I find being over the 800, it actually makes things a lot easier.
Yep.
It's kind of like the bankers will look at it and just put it down and go, yep, I know, it's good.
It all matters. You're absolutely right. If you get over that 800, 810 mark, your whole world changes.
Yes.
Yep.
Now you know why 809 irritated me.
That's what I'm trying to get back to, that 800 mark.
You can. It's just a matter of doing what we just talked about. Pay your stuff on time, proportionate balance to limits. There's just, and don't get a bunch of unnecessary stuff on there, or, collections, judgments, all that stuff matters. It all is taken into consideration. So you just work at it. I mean, there's no magic bullets. There's no overnight changes. Don't listen to anybody that tells you that too. The credit doctors, I've seen them tell people, oh, we can increase your score 50 points, instant, all this kind of garbage. It's all garbage. What I told you, this is what works right here. And sometimes if you wake up the sleeping dogs, it's going to get worse before it gets better. Just be aware of that. Anytime you start dealing with it, there's a possibility that you might have to go in a little regression to get a progression. It can definitely happen.
Okay, let me. No matter what your credit score is, if it's really bad and you're complaining about all of these things, we all did that to ourselves.
Yes.
You liked it or not, we did it to ourselves. And while that word sucks, we need to fix it ourselves too, to be responsible people.
Yep.
That's my political PR today.
That's more than politics there, Dwayne. That's life.
That's right.
Yeah. You usually don't get in overnight. You don't get out overnight, no matter what the situation is. That's exactly right. You just got to work at it. And if you do some self-monitoring, just like you're talking about, Dwayne, I'm so glad you brought the subject up, because people have been talking about it for a while, and I've been wanting to update stuff anyway, but it's something we all need to just pay attention to, because it's once you get in the habit of just doing it ever so often, it's kind of second nature, and you don't have to think about it. I look at it like brushing my teeth. I don't hardly have to think about that every morning, where when, with my 5-year-old grandson, we got to remind him, he's not quite in the habit yet. Well, our credit's the same way. Pay your stuff on time, but just be aware of it and look and see what's going on. Just do it when you don't need it.
Hey, John.
Oh, go ahead. I'm sorry. Go ahead.
When I have an old bank that used to monitor my score consistently, what does that do to your credit?
It doesn't affect your credit, other than it probably fine print. They probably
Yes. How are you?
Let's get Dwayne.
I'm okay.
There we go. A lot of times what they'll do, we kind of talked a little bit about this earlier, but if they monitor it, and they find anything that's maybe late on another account that has nothing to do with them, they could possibly change your terms and your interest rate, Stacy. And I've seen them do that before. In cases, I think I used the example of somebody got divorced. They didn't know that their spouse, their ex-spouse, because they were both on the account, was supposed to be paying that account, but got late. But that directly affected them. And because of the monitoring service, this other account found out and raised their amount, their interest rates and their amount. And is it fair? Not always necessarily. I don't like anything to monitor anything of mine. Obviously, you give them authority to do that, though. Most of the time, if we read the fine print, we do give authority for any of our creditors to look at the stuff at any time. Most will not do it every month. Some of them do. Some of them do periodically. I know the mortgages I have, so a lot of them will do it about every 6 or 8 months. They'll just look at all of them. Now, that's a soft inquiry. It doesn't matter, but they want to see how you're paying all your accounts. Okay. And the banks will typically do that, just every once in a while, whatever their time period is for them. But I personally don't like it, but they can do it. It's not a real big deal. Just make sure you keep all your stuff up to date as much as possible.
Now, John, when they check your scores and everything, does that take a hit on your score when they look at it?
New inquiries, yes. The existing ones, no. That will be considered a soft inquiry, but it still shows up on there and you can still find that out. But if you have, if you're applying for new stuff, new credit lines, new accounts, yes, that will directly affect your score. Now, it's a maximum of 10%. Okay, during a 2-year period, but 10% can be enough. If you're going from a 660 down to a 610, that can make all the difference in even getting a loan. It don't seem like much, but 10% could be a lot.
Yeah, because I just applied for a business credit card just yesterday, matter of fact. So now when they check that, so they will take a hit on that, right?
Yeah, it'll show up. Yep. Yep. And it's not really bad. I mean, we all have to have our credit checked in order to get anything for utilization and everything, but just don't go out and do a bunch of them. You don't want to have 5 or 10 different credit cards and, that you're all trying for with different accounts, different places. We talked a little bit about mortgages. They have a window typically of about 30 days to let you apply for a couple different ones. Same thing with auto. If you apply for an auto loan, it's typically about 30 days. That can vary a little bit, but just don't get crazy. If you go out, and I've had people do this in the past, actually go out and shop for cars every month. And I had one guy that I can think of, his wife didn't even know it, but their credit was, and she's like, well, who is this at Offenburg every month? And who is, and the guy was going to see what he could qualify for every month. He said he had a friend, so-called a friend at the dealership. Well, most of the time they're not really your friends anyway, but that guy, he had like 4 auto loans at the time. He bought a couple for his kids, one for his wife, one for him, or maybe even more. I think he had one for work. But the guy was checking his credit every month. He wanted to keep seeing about updating it, and he kept trading them in too. But that was a hit he was taking every month. That directly affects it because it's a hard inquiry. So just, with what you did, Eric, right there, yeah, just see what happens. Business credit cards, depending on what the company is with, a lot of times they will not report on your personal credit, although you have to guarantee it to start with. Okay, but it may or may not help you in the long run if you're trying to reestablish your credit. I would do most things personal if you're reestablishing stuff first. I wouldn't worry about business so much. Business stuff just comes in time anyway. I've always had to personally guarantee everything I've done, and then my business, like now, I could just, I do most everything in my own personal business and not my personal name. So that's just. But that's, just be aware of the inquiries. Don't go out and get a free gift. Don't get the stadium blanket. Don't get 10% off at Macy's. That kind of stuff never helps that I've ever seen, Plus, it's a new account. Plus, it's an inquiry. Plus, you're maxed out on your proportion of balance to limits. I mean, I can name, and plus, it's the type of accounts, a store account. Store accounts aren't good as far as your credit report goes. There's all the reasons why you shouldn't have one. You can still shop there. You can still use a credit card. Just use a major credit card. That's what I always tell everybody on that. Don't get the free gifts. The free gifts, there's nothing free about it. So any other questions we got today? We covered a lot of stuff. Got good stuff. If you want to copy the slides, just send me an email. I'll be happy to do that. Send me a request. Now I'll put the replay up for our members here. I don't know. It probably will be a couple of days before I get it up, but I'll do it as soon as I can. If I can get it done tonight, I will, but I'm going to be out in the woods and I don't know about my Wi-Fi, if it's going to work or not. So we have about 90% of the time it doesn't. But anyway, I'll get it up as soon as I can. Anybody else got any questions before we go today? No, a lot of good stuff. I thank you all for tuning in. Appreciate it. And we'll talk to you soon. Thanks again.
Okay.
All right. Bye.